I'm Charlotte McLeod with the Investing News Network, and here today with me is James Kwantes, editor and publisher at Resource Opportunities. Thank you so much for being here with me online today.
Thanks, Charlotte. Thanks for having me.
Of course, and we last spoke at PDAC, which definitely feels quite far away at this point. As we're starting off in this interview, I want to ask how 2020 has been for you as an investor. Have your strategies changed at all overall? How does it look for you?
Yeah. I mean, like PDAC, that really does feel like a lifetime away, doesn't it? I mean,
Yeah,
COVID hadn't, I guess it was just sort of ramping up, wasn't it,
that's
at the
right.
time? Yeah, so, well, I mean, like, I think it was about 2 weeks after PDAC happened is, sort of the day when people realized like how bad COVID was going to be. And there's that washout. I think it was a couple days, but it was mostly 1 or 2 days and everything, just sold off indiscriminately. So that was great. Like I was pretty aggressive there, buying some new positions, some things that I wasn't, that I liked but hadn't bought yet, and so on. So that's turned out great. Overall, it's been kind of a choppy year for the juniors. Like gold's done well, but the juniors kind of had a run. A lot of money was raised, and now everybody's kind of waiting for the assays, and it's fairly weak at the moment.
Right. And so you mentioned gold. Gold has definitely had a pretty good year, although the last couple of weeks have been difficult. What are the main things that you see driving gold right now, and what could its price direction be from here on out?
Yeah, so like I think it'll continue to be like negative rates and just the amount of debt that exists in the world. Primarily, government debt that'll drive gold. The focus. I don't do a lot of macro in my newsletter. I just try to focus on great juniors and great companies. Generally, that'll perform regardless. But I think despite the weakness in the juniors, and they're always the last. To get the lift out of a gold price. And we're seeing that now. A lot of them, seem really cheap to me, given that gold's, it's having a down day today, but it's at 1,800 US still, up about 300 on the year. So gold price predictions, don't really do those, but it's just, I think 3,000 an ounce US is just a matter of time, and I don't really know how high it could go.
Definitely we'll have to wait and see on the gold price. When we had our last conversation at PDAC, you mentioned two things that were important for gold companies, which was gold in the ground and cash on hand. I wanted to follow up on that because one of the few bright sides that we've seen this year is that many mining companies have actually been able to raise money. So would you update that statement now, maybe thinking that with many companies actually having cash, is there other things that investors should be looking out for?
Yeah, no, I remember talking about that. And yeah, like I mean, the financing environment this year, like it's kind of been water in the desert, after a few really bad years in the sector. And like I may not have spoken about this at the time, like in that context, but like management, right? It always comes down to management. This year, any company can, in the right gold environment, any company can raise money. But then it's like, what do you do with that money? How do you manage it? How do you manage the share structure? But I continue to like companies that have, either like a gold deposit and have a large drill program as well. And a couple, I guess one that comes to mind is TSK.T Resources, which has the Braylorn gold deposit that they're drilling out. It's a very high grade narrow vein deposit in sort of South Chilcotins. So I think they're going to have a maiden resource estimate probably the first half of next year. And I think it'll be like 1.5 million ounces or above, just under 10 grams per ton. And then they also staked up a huge swath of the Spence's Bridge gold belt. So they've got several greenfields programs there. They're going to be drilling a few of those projects. And I think they'll come up with some discoveries there. So Talisker is an example of great team. It's the guys who found a lot of Osisko's gold, whether at Windfall and then at Barkerville. So it's just a great great technical team. They've got a deposit that they're drilling out. It's quite a predictable. The continuity of the veins is quite good at Braylorn, which is unusual for a high grade vein deposit. So they're basically building ounces there, and then in the Spence's Bridge, I think they have a good shot at discovery. And they've done some big fundraisers, but they still have about 30 million in the bank. And I think their enterprise value, like take out the cash, and they're trading at 30 or 35 million, which to me seems pretty cheap.
Okay, well, great. I appreciate the example of a gold company that's doing well.
The stock is not doing well right now.
Okay.
But I think that will change.
Okay. Well, with opportunity then.
Yeah.
And of course, in the resource space, we are very excited about gold. But as you were mentioning just before we started off this interview, there are other assets out there that are competing for investors' attention, such as cryptocurrencies. There's other things that are going on. Maybe you could speak to that for just a moment.
Sure. Yeah. I mean, historically the venture exchanges have been all about the junior mining companies, and there have been other venture companies on there all the time. But we have seen, this emergence of two entire sectors that just didn't exist 15 years ago, right? Crypto, or even more recently, cryptocurrencies, and then the weed plays as well, and now mushrooms and so on, psychedelics. So I think that's a definite. I think that's a definite damper. Like on a day like today when gold is down, seeing low volumes. But Bitcoin has been ripping, I think it's tripled this year, and there's a lot of money flowing, a lot of sort of hot stocks in that area. So if you're a junior mining focused investor, you got to consider those capital flows, whether you want to. I wouldn't go chasing some of the hot stories necessarily, but just be, you got to be cognizant of that. You got to wonder you got to decide whether you want to position yourself in other areas like I do. I don't only invest in junior mining, although that's quite a large majority of my holdings, but I do diversify a bit. But having said that, I do think that like the depressed prices now, as low as they are, I think once things get ripping, they'll correct the other way like they always do, right? It's so heavily cyclical. Things are cheaper than you could ever imagine they could be. But then on the upside, things get priced ridiculously. So we're still waiting for that, but right. I think it'll come.
And you mentioned that you don't only invest in junior resource companies. I was looking back on our previous interviews. The first time we spoke was in 2018. And I think periodically you've been bringing up to me graphene in that time. I know one of the stocks you're watching in that area is NanoXplore. You mentioned they have some things going on right now. So what is the story there? What is the update?
Yeah, so NanoXplore. Yeah, I've been pounding the table on NanoXplore in my newsletter. So I kind of stumbled across it. I used to like a stock called Mason Graphite, and so this is sort of a cautionary tale in a couple of ways. But Mason Graphite, they have graphite deposit in Quebec, high grade, and I got killed on that. I lost a lot of money on that. But there was an affiliated sort of company called NanoXplore that was a graphene play that IPO'd, I guess, about 3 years ago. And, their plan was to use graphite from the Mason Graphite deposit. And Mason owned quite a large stake in NanoXplore initially. And so the more I looked into graphene, and specifically this company, the more it just kind of clicked with me and resonated. It was a kind of an ambitious plan to kind of create the market for large-scale commercial bulk applications of graphene, which can also be blended with other things. Like a lot of car and truck bus manufacturers are already using graphene in their composite products, for example, the bodies of the vehicles and so on. So yeah, so I sort of transitioned, out of Mason graphite into NanoXplore, and it became a large position for me. And I've been, covering it in the newsletter ever since. And I think just before, actually, so you interviewed me at PDAC, and just after that, I took the train to Montreal, where NanoXplore is based. And I met the CEO, Soroush Nazarpour, and he gave me a tour of the plant, which was still under construction at the time. So yeah, it's been a busy year for NanoXplore. Graphene's funny. It's been a science experiment. It's got these qualities, like it's stronger than steel, conducts heat better and electricity better than copper, and so on. But it's kind of been a science experiment up until now. So NanoXplore's plan was to build a 4,000 ton per year graphene production plant. And to give you a sense of perspective, like I think global graphene production was about 1,000 tons, not that long ago. So it was an ambitious plan. And in the graphene space, there's a few plays around. They tend to be heavily promotional, lots of hype and fluff. Well, NanoXplore is the opposite. So I think they've issued like 6 news releases this year. They raised like 25 million in the middle of, just after my visit, to make sure they could build the plant, despite COVID and the restrictions and so on. And then they got the plant up and running. It's commercial production. And then more recently, they have expanded into the US. They've purchased a business in North Carolina. And when I talked to Soroush at the headquarters, he talked about expanding. And the plant they built in Quebec is very modular. So it's 4,000 tons a year. It's going to go up to 10,000 tons a year. And it's the type of plant, it's highly automated, barely any, it's kind of run on artificial intelligence. Not many people will be working there. So it's something that could be replicated elsewhere. And he talked about that. So, when I saw the announcement of the US business acquisition, I thought, well, there's going to be a graphene plant down there before long. And then more recently, Martin Ray, which is a fairly large auto parts manufacturer based out of Toronto and a NanoXplore shareholder, announced a purchase order of graphene for fuel and brake lines for their passenger vehicles that they work on. So lots going on in a year. But NanoXplore was a hard stock to hold on to. I think it was trading at about $1.50 when you interviewed me at PDAC. And over the last 3 years, it's kind of basically flatlined around about $1.40 to $1.60, despite the execution on the ground that they were achieving. And so finally, in the last couple months, the stock, people are starting to notice volumes picked up, and I think it's trading at about $3.80 now. But I still, that's an example. It's just a great business. The CEO owns more than 9% of the stock. He's heavily incentivized. He's got a plan. He's executing on it. So when I find one of those, I just want to, hold on to my position and keep increasing my position. But patience is hard, especially now with the information at your fingertips and how easy it is to trade and chase things and so on. So that's been it's been a challenge to keep that as a core position. But it's nice. It's finally paying off. And I still think it's actually early days for that company.
Okay. And
Yeah.
on that note, I noticed that a lot of maybe not a lot, some resource-focused investors are a little hesitant about technology plays, and not even necessarily graphene, but if there's a rare earths company looking at a different way to do separation or something like that, people feel a little hesitant. So, how do you get the confidence to jump into an arena that's potentially less straightforward than a regular mining stock? Is there any advice you could offer to others?
Yeah, I mean, I feel like I have to correct you. I don't find junior mining stocks that straightforward. Just from the point of view of, so many things can go wrong and do, right? You know, you got to consider most of these things most junior mining companies are going to fail. The vast majority, right? So it's, you know, so I don't, you know, and there's different, you know, there's moving parts. You know, gold has gone up, you know, $300 an ounce this year, but a lot of the junior mining companies have not kept pace. You know, like management issues. Are they incentivized? You know, through seed stock that they got at fractions of a penny? Are they buying in the market? You know, the deposit, is it economic? There's just so many moving parts with a junior mining company. So I don't find it too straightforward. But NanoXplore, I just did a lot of research on the company and on the space, and you know, it was great to meet Sarush. I talked to him on the phone. I've talked to him on the phone, you know, throughout. It was good. You know, it's always good to meet in person. I'm sure glad I got that opportunity before COVID. But he's a very low key. He's a very smart, kind of low key guy who just executes. You know, he sold like 4 businesses. Some of those were smaller, but the last business he sold to a company based in Saudi Arabia called SABIC, SABIC. And he sort of casually asked if I'd heard of it, and I hadn't. You know, so I looked it up later, and it's like an $80 billion company that bought his last business, right? And I do think NanoXplore is going to become a multi-billion dollar company. It certainly has that potential.
Any other success stories that you would mention from this year, or perhaps other opportunities that you're watching heading into the new year?
Yeah, so I guess a couple I would mention, like Great Bear Resources, which is Chris Taylor out. They have the Dixie project out in Red Lake, high grade and disseminated gold. So they've just continued to, I mean, they just keep finding more and more gold along the LP fault at their property there. And they've had a good run this year. That was one of the stocks I loaded up on in that March sell-off. So that one's performed well, but the stock, if you look at the last several months, it's kind of flatlined, even as the company continues to hit along multi-kilometers. So I think that's going to be a big mine someday down the road, and I don't think the stock price reflects that yet. Another one, I guess, is Fireweed Zinc. They got the Mac Pass project up in the Yukon near the Northwest Territories border. So it's very remote, but it's a large project. They keep adding to their land position. The zinc. It looked like at one point it looked like around PDAC. I didn't think that they would even have a drill program because of weakness in the markets. You know, but the zinc price lifted. They were able to raise money, and so they're waiting for assays on their project there. The stock's done very well. I think it still has a lot of upside too. They have a large resource up there already, and they've done a PEA and so on. But I like the you know, the management and execution of both of those stories, for example. Yeah.
Perfect. And looking more broadly, are there any overall trends you're seeing in the resource space that you would want to mention?
Yeah, I guess one that doesn't, you know, it doesn't seem that important in the grand scheme of things, but I do think it matters, is the social media engagement. So you're starting to see CEOs, you know, participate in forums like on Twitter or at CEO.ca, which I think is a good trend, right? I mean, you know, you got these channels, for example, at CEO.ca, which I spent some time on. You know, you have these channels where people are discussing the companies and the stock, and you know, having the CEO participate in there. There's limits to what they can say, obviously, but I think it's a great approach as far as responsiveness. And you know, with the younger investors getting into the space, you have to engage them. And a lot of companies don't do it, don't know how to do it. So you know, so I think that's a sort of an emerging trend. And there's, you know, some CEOs are doing a good job of it, like the Fireweed Zinc CEO Brandon McDonald, younger guy, he does a good job of it. And Doug Ramshaw's another guy, the CEO of Mineralamos. And another one I think is technology is going to play a bigger role going forward. You know, in a lot of ways, the mining industry's old school, and you're seeing it with the producers, driverless trucks and so on, and ore sorting. So I think, you know, that'll obviously only continue. But I think in the mind, in the exploration space as well, I think technology, things like hyperspectral intelligence, I think technology will play a growing role there too.
I agree. Those are two good trends I think we should be watching. As we finish up, I want to end with a couple of questions that I think I'm going to be asking a lot over the next month or so. And that is, can you share one thing you learned in 2020 and your best advice for investors heading into 2021?
Yeah, yeah. Man, patience is so important. Like I say, especially in this technological world, distractions. I mean, social media can be a big time suck as well. But it's so easy to trade, buy, sell stocks. Um, but I continue to believe that the big money's made by establishing large positions in high conviction companies. So companies, not stocks. So another one would be like, don't fall in love. Don't fall in love with a stock.
Well, thank you so much. It was great to catch up with you after
Mhm.
this very interesting year.
Yeah, thanks for doing it, Charlotte.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is James Kwantes with Resource Opportunities.